We're going to protect the balance sheet. We want a pristine balance sheet. And finally, we're going to promote global adoption of BTC as a Treasury Reserve asset.
Michael J. Saylor joins top strategy executives to reveal fresh Q1 updates, bold Bitcoin moves, and what's ahead. Let's watch and see how strategy plans to shape the future.
We've got a yield curve, and I'm showing you the BTC yield curve. And on one side of the yield curve is Strife. And what you can see is I've created the yield curves for various MNAVs ranging from 1 to 2 to 3 to 4 to 5. So when the MNAV is 1, you've got a very steep yield curve. And you can see here that you're getting max yield with Strife and some with Strike, and then you're getting a bit with the converts. I mean, they all work. And then you see the equity isn't generating any BTC yield. But as the MNAV increases, the yield curve flattens. And of course, you can see, at an MNAV of 2, you're getting decent, healthy yield across all parts of the yield curve. And as the MNAV increases and it flattens, then you can see the yields on the equity and the convertible equity instruments start to approach the yields from the hard, from Strike and from Strife. And this is important to keep in mind. Let me convert that to spreads for you. Spread is the percentage of the capital we raise that results in a gain to the shareholders. That is, how much of the capital is an accretion. If I've got a spread, I've got an MNAV of 5, that means when I sell $100 million worth of equity, $80 million is the value of the gain. And so our shareholders are capturing 80% of that capital, right? It's an 80% spread. So you can see here that, Strife is a 100% spread instrument. Strike generates spreads anywhere from 60 to 92% based upon the MNAVs. The converts will generate spreads from 29 to 86%. And of course, MSTR, if the MNAV is 1, it generates no spread. But when the MNAV is 2, it's 50% spread. There's a pretty big difference between 2 and 1. Massive difference. When you get to 3, it's 67% spread. And that is 2/3 of all the capital you raise is a gain generating yield for the shareholders. And that yield is what allows us to outperform.
Michael Saylor's strategy just added another 1,895 Bitcoin to its already massive holdings, spending $180 million between April 28 and May 4. The company now owns 555,450 BTC, acquired for roughly $38 billion and currently worth around $52.2 billion, giving strategy a paper gain of over $14 billion. This latest buy was funded through the sale of common and preferred stock, part of the company's aggressive 21-21 plan to raise capital for Bitcoin acquisitions. With the common stock portion of that plan now fully used, Strategy has introduced the 42-40 plan, aiming to raise another $42 billion through 2027, split evenly between debt and equity. Even after reporting a $4.2 billion net loss in Q1, largely due to accounting changes for Bitcoin, Strategy continues to dominate the corporate Bitcoin space. As other major firms begin to follow suit, Strategy's bold bet on Bitcoin keeps pushing the boundaries of institutional crypto adoption.
So you're asking the question probably, well, this is all well and fine. If I'm selling these fixed income instruments, I'm getting a higher yield, I'm generating a higher spread, but what's the risk? You've got an 8% coupon or dividend on Strike, you've got a 10% dividend on Strife. So we think about what is the hurdle rate that we have to overcome in order to avoid missing our numbers, or in this case, if I report that we generated 100% spread on Strife, and we show you BTC gain equal to $100 million, well, under what circumstances would that not be true in a decade? And the answer is, as long as BTC ARR is north of 7.2%, then that gain holds. So in essence, the hurdle rate is 7.2% for Strife. The hurdle rate for strike is 6.1%. The hurdle rate for the converts is 2%. And the hurdle rate for the equity, intuitively, this should not be surprising, is 0%. As long as Bitcoin is appreciating more than 0%, then there will have been a gain and a yield on an equity transaction. And so, generally, most of our equity investors expect BTC to appreciate more than 7.2%. As I said, the maximalist thinks 30%. So generally, if you believe BTC is going up 10, 20, 30%, most of the financing we're doing is comfortably above these hurdle rates, which means that when we say we generated a BTC yield of some percentage or a BTC gain of something, I think you can be comfortable that it's a reasonable metric for you to take into account. Now, let's think about break-evens. Under what circumstances would it be a mistake to have done any of these financings? Or another way to say it is, are there any circumstances under which we don't create shareholder value? I'm using a 10-year time frame, and so I'm going to show you some numbers. If we sell equity at 1 times MNAV and the price of BTC is 95,000, the break-even price is 95,000 in 10 years. And the BTC ARR, or the break-even rate, is 0%. That's kind of common sense. Now, what if I sell it at MNAV of 2? Well, the break-even price drops to 47,000. Bitcoin could decrease 6% a year for a decade, and you would still be better off as a common stock shareholder with us having done that transaction. So in fact, when we're selling equity at MNAVs of 2, 3, 4, 5, we're de-risking the company. We're not increasing the risk. And so you can see here, I've got the break-even prices and the break-even rates for the equity, for the converts. I've got it for Strike. I've got it for Strife. It's kind of a bit of a surprise, but we sell a lot of Strife. We attach a 10% dividend to it, but it turns out that even if Bitcoin goes up 0% a year, we're still breaking even over the 10 years. So we're not actually taking, I think, as much risk as it might be perceived by a traditional investor who doesn't really think hard about what's going on here.
Michael Saylor isn't slowing down on Bitcoin. The Strategy co-founder has signaled yet another potential purchase, marking what could be the company's 4th straight week of BTC accumulation. This relentless buying shows why Strategy is not only the largest corporate holder of Bitcoin, but also one of its most powerful advocates in institutional finance. Their most recent buy on April 28 added 15,355 BTC for over $1.4 billion, boosting their total holdings to a staggering 553,555 BTC. According to Saylor Tracker, Strategy is sitting on more than $15 billion in unrealized gains, with its Bitcoin investment up around 39%. This success has kept Strategy front and center in the institutional crypto conversation, attracting both retail and Wall Street investors through its publicly traded shares. Even with this crypto windfall, Strategy reported mixed Q1 financials, including a revenue dip to $111 million, down 3.6% year-over-year and below expectations. But the company remains committed to its Bitcoin-first approach. So far in 2025, it's acquired over 61,000 BTC and announced plans to raise another $21 billion through an equity offering to keep buying. Some analysts believe Strategy's next move could be even bolder, possibly acquiring entire companies with large cash reserves and converting those reserves to Bitcoin. With the company currently buying over 2,000 BTC a day, more than 4 times what miners produce, the pressure on supply is only growing, and so is the potential for long-term price gains. That's all for today's video. Until next time.